How much pushback have we previously discussed? Is the level of resistance you encounter the same as it was a month ago, or are more people taking notice and commenting, "Hold on, this anecdotal evidence is beginning to make sense"? Yes, look, I believe that price is the key question for investors at all times. We live in a late cycle environment, after all. I should simply quickly arrange the table a bit, right? For the past year, we have been operating in a late cycle environment, which is characterized by a great deal of unpredictability. Correct? People may be mistakenly believing in this lovely gentle landing with some reacceleration next year, since they incorrectly called for a recession in the early half of this year, which did not occur. That was most likely pricey in the summer. Investors are manipulated by price movement, and in the last 2 months, there has been another breakdown in many parts of the stock market, in my opinion. Yes, the averages are down 4 or 5% overall, which isn't too bad, but some of these consumer stocks are performing quite poorly. That, in my opinion, illustrates what we discussed just before going live, namely that middle class and lower class consumers are clearly out of extra savings. That's now beginning to seep little into the upper end as well. The student debt moratorium is in place, and I believe it to be the deciding factor. Can the consumer continue to surprise to the upside? That is the risk for the next fourth quarter. Tesla has altered the EV landscape. Because of this, practically everyone wants an electric car, or at the absolute least, they want to drive one, because the concept of owning one has become so alluring. It is reasonable for investors to anticipate a possible slowdown in Tesla's growth as the industry continues to grow. Will Tesla grow further, and if so, what growth-related prerequisites must this carmaker meet? Come along as we discuss this fascinating subject. In its endeavor to electrify the future, Tesla has many advantages, including growth strategies, new model introductions, manufacturing expertise, and cutting-edge battery technology. In the world of Tesla, enthusiasm is almost constant. However, many people continue to worry that Tesla won't be able to keep up with demand despite these advancements. The competition is growing so quickly that Tesla won't be able to keep up its current lead or even expand as much as it should. Is any of this actually true, though? In this video, we'll talk about the different steps Tesla is doing to keep its stock rising and why, after enduring its worst fiscal months to date, the company's stock will continue to rise in the next months. So let's get started right now, please. Let's take a closer look at some of the most popular tickers of the day, starting with Tesla. The price objective of $285 was lowered by Deutsche Bank, causing those shares to decline. There, analyst Emmanuel Rosner predicts that the EV manufacturer may fall short of third-quarter production and delivery targets. According to him, the bigger risk associated with Tesla is the negative growth and profits projections for 2024. Josh, I believe it's fair to say that Rosner is one of the analysts covering Tesla that is most well watched, and it's notable that he stated that his base case for Tesla is that it would guide to roughly 2.1 million deliveries in the upcoming year. 2.3 million is the consensus. Indeed, what he says in this message is intriguing, since it essentially sums up how he attended the Deutsche Bank Investor Day and learned that Tesla might no longer have plans to increase production at its Austin and Berlin factories. He believes that Tesla will predict below-street deliveries in 2024, as you mentioned. However, he perceives a glimmer of hope there. He suggests that if they don't put as much emphasis on volume, there may be less pressure on prices. So he still thinks this is a good purchase. Thus, it's possible that he is suggesting that Tesla's car gross margins, which everyone is so interested in, might begin to slightly increase. Let's see. Ross Gerber has some advice that you might find interesting if you've ever considered investing in electric cars, especially Tesla. He is an expert on stock prices. The price of Tesla's stock and the opinions of analysts suggest that buying electric cars, and particularly Tesla, might prove to be the most significant investment strategy of the ensuing 10 years. As you can see, the globe is rapidly transitioning to electric vehicles. When it comes to clean energy, everyone is finally starting to see the light, and you can guess who's at the forefront. You're correct, Tesla. Welcome back to Tesla Tomorrow, everyone. There has been a lot of talk regarding possible delays in Tesla's entry into Mexico. Some have even said that while this might not be a huge issue, it might have some medium term implications for Tesla's growth. A significant portion of Tesla's strategy involves market expansion, and Mexico is no exception. As a result, any delays may cause the company's efforts to stall and negatively affect its standing in this encouraging market. Although this might be the case, a long-term investor shouldn't be alarmed for the following reasons. But before we do that, if you enjoy this kind of content, remember to like, subscribe, and ring the notification bell to stay informed about everything Tesla is up to. To start, I find Tesla's growth strategy to be quite interesting. The carmaker is getting ready to introduce the Vehicle 2, a smaller vehicle that will be quite popular. The goal of the Tesla Model 2 is to satisfy consumer demand for a more reasonably priced EV. For consumers who have been waiting for Tesla to offer something within their price range, this may open up a whole new universe. Elon Musk, the CEO of Tesla, stated to investors during the company's most recent investor day that the company aims to cut manufacturing costs in half. This is primarily due to upgraded manufacturing procedures and a next-generation car platform that will be produced at its Gigafactory in Mexico. It is anticipated that this level of production will enable Tesla to introduce cars with sticker prices under $30,000, which are on par with that of a conventional gas vehicle like the Toyota Corolla. Because more individuals will be able to purchase electric cars, this move will assist promote the adoption of EVs in the mainstream. It's similar to letting a lot more people into the world of electric vehicles. Lars Moravy, Vice President of Vehicle Engineering at Tesla, elaborated further on the advantages of this action. He asserted that reduced manufacturing costs result from increased auto production numbers. In explaining this, the Tesla executive emphasized how important new generation EV platforms and manufacturing will be to the company's ability to meet long-term production plans. Therefore, Tesla has ambitious ambitions to increase production to very high levels. Imagine how many cars Tesla will be able to create and how many sales it may generate if it can reduce the cost of car production. It is going to be quite revolutionary. However, it is undeniable that Tesla is not idly sitting about in terms of production. The company presently has 2 plants that have the capacity to produce more than 500,000 vehicles annually. That's a big number of Tesla vehicles on the road. Not only do Tesla's vehicles excite us, but so do its battery cell lines, which are a major factor in the company's ability to stay ahead of the competition in the EV market. Since batteries are the foundation of all automobiles, Tesla's large-scale, successful production of them is significant. The problem is, Tesla is aware that having cells with a high energy density is essential for success. The manufacturer is particularly interested in the 4680 cells since they have the potential to change the game. These cells are essential for creating EVs with a greater range than the little Model 2. Therefore, it's not only about what's within, it's also about what the cells can accomplish. There are several good reasons to switch to electric vehicles, including environmental preservation, tax savings, and government benefits. EVs have a moment to shine. Even if EVs are not the most inexpensive car models and have certain drawbacks, more individuals are beginning to realize how advantageous it is to own one. The current trend toward electric vehicles, EVs, is mostly due to the rising popularity of EVs and the volatility of their oil pricing. It is quite likely that oil prices will continue to rise in the years to come, given how erratic they have been in recent years. Many people and companies are considering alternate solutions, such as electric vehicles, EVs, to cut expenses and lessen their reliance on fossil fuels as a result of the unpredictability of the oil market. The truth is that, rather than standing still, Tesla is expanding its reach globally, which implies that it is entering more new markets and, consequently, increasing the number of Tesla vehicles that are driving across the globe. It is difficult to imagine that Tesla's future growth strategy will resemble what brought the company thus far. Selling more of its cars in more markets is the major way to do that. It might also entail the release of new models. For example, a few individuals have been waiting for the Cybertruck to go into production, and Tesla has also shipped a few of its potent semi-trucks.